with us today. I'm going to reveal how to forecast and predict market directions up to 3 days in advance. So this can be applied to any asset class, any market, any time frame. And I'm going to also be sharing with you my proprietary slingshot setup and how to apply this tool to a very specific setup in the markets. All right, so before we get started, I'll share a quick disclaimer with you. Trading securities and options involves risk. Prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standardized options. And of course, you need a broker to trade securities and options and must meet suitability requirements. We'll be going over some various results together today to reinforce the training. And just know that any results that I share with you, they may be based on real money results or hypothetical results. That any of those that I share don't indicate future performance. Of course, due to the time-critical nature of trading, brokerage fees, activity of other traders, we can't make that guarantee. All right, so let's start out by looking at some common faces: Warren Buffett, Mark Cuban, Carl Icahn, George Soros. So these are probably familiar to many of you out there. They're all famous investors. They've all done very well in the markets over long periods of time. So they have that in common. But they actually also have something in common that you might not imagine or might not guess. And that's actually that they've all made bad trading decisions. They've all bought high and sold low. And so you might think, well, how they're so successful, they've made millions or billions of dollars in the markets. Why is it that they've made these types of errors that we as retail traders all at some point make, right? And it's because they're human just like we are, right? We all are at some point in a circumstance where we make a bad trading decision, or we get into the market at the wrong time, right? When a market's going up, we might be enticed to jump in on the trend. And often that can backfire and reverse on us, right? And we can end up getting in at a top and riding the trend down as it moves against us. So this happens to everybody. There are no exceptions, but I think it's important to realize what causes this and how we can actually address it and provide a solution to it. And to do that, we number one need to understand, why is the market so difficult to trade? Why do we often get stuck in this type of repetitive cycle? And that's really what separates legendary investors like Warren Buffett and George Soros from a lot of the retail traders that are not successful. And really, a lot of it can be boiled down to psychology. And so maybe you've seen a psychology curve at some point like this in the past. This applies specifically to the markets and how we tend to react with the markets and make our trading and investing decisions. And that typically starts out, as we're getting into a trade or into an investment, with some degree of optimism, enthusiasm, even euphoria. And inevitably, when we encounter some hurdle or the market throws us a curveball, a trade moves against us, and that can quickly transform into anxiety, fear, despair. We might panic sell, take heavy losses, only to see the market eventually go back in the original anticipated direction. So this is kind of the basis of the psychology of failure in the markets, and we really need good tools and strategy methodologies to overcome this. So kind of to lay the groundwork for that and how we can address it and overcome it, we have to understand that when we enter a directional trade, our goal is, of course, to buy low and sell high. Of course, if we're executing a bearish strategy, we'd obviously want to do the opposite, but really that goes against our human instinct. So often when a security is going down, we sell it. And looking at that psychology curve, that's where we might be panic selling, basically stuck in a situation where we don't know how much worse this situation can get. And ultimately, that kind of repeats in this cycle where we'll also buy an asset after it's already gone up. and so we're either getting in too late or selling when it's really not appropriate. And so we panic, right? The typical human emotion when price is falling because we're afraid of losing money, right? We don't obviously want to lose money, even though we know that it's part of the game. It's part of the trading and investing. And then we buy when it's rising because we're afraid of missing out. So it's the fear, FOMO, or fear of missing out mentality. And so to compound that problem, we are wired to repeatedly make the same mistake. So likely if you ever encountered this in your trading or investing, it probably hasn't just happened one time. This might be a repetitive cycle. So we'll buy high and sell low because that's what our emotions tell us to do. And it's difficult to overcome that without a solid trading plan, because we are vulnerable to our emotions, which are tied into uncertainties, right? There are uncertainties in the markets. We just never know what they're going to do next. So if we're lacking a strategy that can identify momentum shifts, which means we don't necessarily know when to get in or buy low and get out and sell high, that can pose a major problem for inexperienced traders and investors. So what we're going to do in our session today, and I'm going to give you some strategies and tools to overcome this, is we're going to turn the tables, right? So rather than being greedy when there's a high level of financial risk, or fearful when it might actually be the best time to enter a bullish trade or an investment, we're going to turn these tables. So I'm going to reveal how you can take a contrarian approach and actually understand when markets are overextended to the upside, when there actually is typically a greater or higher level of financial risk. And actually, if you want to use the term greed, be greedy when it's really the best time for investing. And that's when other traders are panicking, right? So when other people are panic selling, this creates opportunities. So and we'll look at some chart examples, but if you've ever wondered, after significant market crashes, even when the catalyst for that crash has not necessarily been resolved, one example is the crash of early 2020, around the advent of the COVID pandemic, right? You might wonder, well, how does the market rebound so significantly in the midst of a scenario where that catalyst may not even be resolved at that point? And that's because of this psychology curve. So people like Warren Buffett, who of course uses this contrarian approach and says, be fearful when others are greedy. And so that's the approach where if there's a bear market or a black swan event or a market crash, it's creating opportunities for contrarian investors like Warren Buffett to come in and buy low and sell high. All right, so what I'm going to give you today to make this easier. Number one, we're going to look at the slingshot setup. This is my proprietary setup. It's worked 100% of the time on the major indices going back to the dawn of the stock market. I'm going to show you how to identify the setup, how to trade the setup, how to profit from the setup, how to get in near the bottom and out near the top. And so we're not playing a game here of trying to catch the exact bottom or top. I'm going to give you some tools, tricks, and tactics to help us navigate these major market turning points and help us buy low and sell high. We can apply this to any market in any time frame, as I mentioned. I'm also going to give you a trick for how to eliminate many of your losing trades. This is just one simple order type or order entry technique that can keep us out of bad trades. So help us not even get into something that like a directional trade that doesn't actually pan out. We'll look at some different trade examples together, and stick with me to the end, and I'll show you guys how you can get my tools and strategies that I use. I'll show you how you can use these trade signals yourself. And these are ones that I use to make a living in the markets myself. I also use them in my hedge fund, which I'll give you a little bit of background here momentarily. But first, I want you to imagine if you could buy low and sell high without any guesswork. All too often, we use some degree of intuition or guesswork in our trading. And even if we're using an indicator or a black box system or something that has a strict set of rules, there's always the potential for human intervention. In fact, what a lot of educators don't reveal to their students is a huge component of trading success, especially if you're following an indicator or a newsletter service, is just the ability to adhere to the strategy. So even if you're using a very strict set of rules, or you're following somebody else's trades, there's still the potential for you to reach a level of uncertainty or panic even, and abandon that strategy, when it may just be a normal drawdown or downturn in the strategy. So with that said, we're going to look at one volatility study that has actually made this possible to buy low and sell high, going back to the beginning of the markets. And as I mentioned, this is actually played out, as I'll demonstrate to you, 100% of the time on the major indices. And it's a unique setup that I've coined the slingshot that has allowed us to do that on the major indices with 100% accuracy. As I mentioned, it also works on individual stocks, on Forex markets, futures markets. You can really apply this to any asset class and any time frame, and we'll look at some examples there. It also warns us of potential market sell-offs, right? So when markets are at all-time highs, when they're hovering in that zone like they are right now, we want to know, is there vulnerability, right? Because right now, the greater risk after this, parabolic run-up that we've had in markets over the last couple of months, the greater risk is to the downside, right? The opportunity to the upside is less than it is to the downside. And, tools like the VIX, the VVIX, the skew index, those things tell us that. And so we need to be aware. And there is a way to do that. And it's what I call a rubber band effect, or a slingshot. And once these bands of the market can't be stretched any further, they must bounce back. It's an inevitability of volatility, of market volatility. It has to occur in order for markets to make directional moves. And that rubber band effect can make it possible to accurately identify tops and bottoms in the market. And again, not exact top. We're not going to buy at the low, at the penny low, and sell at the penny high. We're looking at zones here, and this tells us exactly where those are and how to do this. So here's a chart example. This is the Corona crash from early 2020. It's a daily chart of the S&P 500 index. All right, and thinking back to that psychology curve that I shared with you, in late February, right, markets at this period of time were hitting all-time highs on the S&P, right? Now, what most people think, and now's a great example, when markets have had a significant run up, at this point in time, we were kind of at the tail end of this decade-long secular bull market. There's actually a high level of financial risk, and most people are buying into that because they have FOMO, or fear of missing out. But from a contrarian perspective, this is where we could look for opportunities to sell when most other traders are buying. And this is often where people get trapped, right? They get trapped, the longs get trapped, and they're forced to liquidate on a panic sell-off. But as I mentioned, that creates buying opportunities. So when most other traders are panic selling, we have opportunities to come in and buy, right, at lower prices. And as I previously mentioned, right, when this sell-off in 2020 took place over only the course of a few weeks, right? Well, COVID was still in its infancy. We didn't know much about it. We didn't know quite what the global impact was going to be. We didn't know how it was going to impact economies and markets. And so obviously in mid-March of 2020, none of these things had been resolved, right? Yet, over the next couple of months, the S&Ps rebounded and actually traded back up to the levels where they were before the crash ensued. So that's what we're going to apply this slingshot and another really cool tool to help you navigate these types of situations. So I'll give you just a little quick background on myself. Again, my name's Jeff Tompkins. Welcome. Great to have all of you here. And by the way, I will be leaving some time for questions, hopefully at the end. So just bear with me. I want to make sure I get through everything, so you walk away with all the strategy and tools that you need to basically navigate the markets, buy low and sell high without guesswork, right? And do so without emotion. All right. So I have 24 years of experience trading the stock, options, and futures market, and I didn't start out that way. I started out, trading in the way that first psychology curve we looked at demonstrates. I've been through that roller coaster many times. But things started to shift for me. So back in the early 2000s, I did my professional training as an intern at the trade desk at Morgan Stanley. And I started to kind of get a feel for this contrarian approach and why markets really move the way they do. And had a lot of success and had kind of this light bulb moment, and things started to turn around for me. And thought, well, I really need to share this with others because, I have friends and family that trade, and I've seen them go through all the struggles. And I thought, well, I could keep this to myself, or I could share it with people. And that's what I decided to do about 8 years ago. I founded Altos Trading, where I'm the chief investment strategist, and we've grown tremendously. We have over 60,000 members in over 100 countries across the globe, who learn about these different unique methodologies and approaches to trading and investing. And it's been a real pleasure to see the difference this has made in people's lives, which then caused me to decide to open up a hedge fund and do this for people who maybe didn't have time to trade, or just didn't want to be exposed to the roller coaster of trading, right? So I launched a hedge fund back at the beginning of 2020, Altos Capital, where I manage capital for my clients, using a lot of these strategies and tools that I'm going to share with you today on the session. And I'm also the founder and creator of the Trade Trend Signal software, which I'll be sharing information with you on today as well. So by the end of our session, you'll discover how one trade setup that's never failed, going back to the beginning of the stock market, has been so reliable that it's worked 100% of the time on the major indices. And I'll show you some examples of that. So it hasn't failed once. Even the Corona crash, the 2022 bear market, it happens repeatedly. It's predictable. So there's a level of predictability that can help us achieve a positive expectancy, right? Which means that we have an edge, or a statistical model that demonstrates potential profitability over long periods of time. So whether you're just starting out or you're a seasoned veteran, this is must-have information for today's markets, especially where markets reside currently. The levels of volatility, erratic price behavior, all of these things. This is the year to understand this, to grasp it, and to implement it. Of course, we've got an election year. We've got high inflation, high rates, major Fed decisions on the horizon. These things are all going to have major impacts on markets. And of course, we're in the midst of earnings seasons now as well. So to help you navigate all these, by the end of our session, you'll know, number one, why volatility is one of the only leading indicators of market direction, how to identify when markets may be vulnerable to a sell-off. And this alone, I think, can completely turn your trading around, because it addresses the psychological fear that we face after we enter a trade, or when markets have trended up. We need to have some degree of confidence of, is there vulnerability to a sell-off? Could I experience this successful position that I'm currently in? Could I experience all of the profits that I've, albeit paper profits or a floating P&L, evaporate, right? We've probably all experienced that. We've been in a successful trade, and then it turns around on us and wipes out everything that we've made, or even turns into a loss. We want to also know how to identify when the market is likely to go up, like we looked at on the S&P chart back from 2020. How do we know when it's going to go up? And how do we know how far it's going to go up? And I'm going to show you a cool trick here to reliably determine, within the context of a slingshot, where markets are likely to return to. And again, stick with me to the end. I'll show you guys how you can get your hands on a tool that I believe will change your trading forever, because it has changed my trading forever. It's made a tremendous impact and difference in my overall results. So let's imagine a slingshot. Right. So why do I call this the slingshot? Well, as we pull the slingshot back, muscle energy is transferred to elastic energy in the bands of the slingshot. Right. So after we release the slingshot, that elastic energy is then transferred to the stone as energy of motion. This is what in physics is referred to as kinetic energy. So why does that matter to the markets? Well, kinetic energy, not in the form of physics, but in the principle of kinetic energy, actually plays itself out in markets, in market trends, in the form of supply and demand. So if there's demand in a market, it creates buying pressure and markets go up. If there's excess supply in a market, right, it tends to cause profit taking, hedging, things that can drive markets back down. Once these bands become overstretched, it gives us a buy signal, and we can enter the market with high confidence that prices will go up to the initial resting point of the band. So how do we do this? Well, when we analyze major market turning points or forecast future turn direction, volatility is the tool we want to look to determine this. In fact, volatility is a forward-looking predictive indicator. So like if you look at the VIX, which aggregates, it's a CBOE volatility index. It aggregates the S&P 500 index options and looks out 30 days and gives us a forward projection of implied moves over the next 30 days, right? We're going to be using the Bollinger Bands. Okay, these are volatility bands, and they tell us when prices move too far from an average or the mean and is likely to reverse direction, right? And the Bollinger Bands, which I'll walk you through and explain how we use them, because it's different than probably how most people use them. Number one, it's available on any retail trading platform or charting platform. But if you understand how to read them, and more importantly, how to apply a contrarian perspective to them, it can help us pinpoint turning points in a security with quite astounding accuracy. And this is what it looks like, right? So this is the slingshot in action. I just want you to see it now, and then we'll walk through it and walk through the steps, right? But notice how price is on this asset is beginning to rotate lower, right? And notice how it's coming down into the lower volatility band. It then, for a period of time, trails that lower band. There's a sell-off, which ultimately leads to a major trend reversal back to the upside, and price returns right back up to that initial volatility expansion level. So again, I'm going to walk you through this, but this is what the slingshot looks like. All right, so first let's look at the Bollinger Bands. We won't go into huge detail here, but I want you to have a basic understanding. They consist of 3 bands, right? So we take a simple moving average, that's the center band that you see of the securities price. And again, we can apply these to any asset. Then we take a standard deviation of the securities price, and that's just basically a mathematical measurement of average variance. So this is where we get information on market volatility or volatility of the asset. So those are our 2 outer bands, right? And I won't, again, go into all the details here, but standard deviation basically measures how spread out numbers are from an average value, right? So if they're more spread out, then that means we're in higher volatility conditions. And because it's a measure of volatility, when those bands widen, right, markets are more volatile. And when they're tighter or closer together, it indicates less volatility. So the settings that I use are just typically the default settings on most broker charting platforms. So I use a 20-period simple moving average for the center band and a 2 standard deviation setting for the outer bands. So that means that the upper and lower band are 2 standard deviations away from the mean or the average. Right, so we know when price is at the lower band, for instance, it's trading about 2 standard deviations away from a 20-period simple moving average. Okay, so we have a basic understanding of the bands, what they tell us. How can we use them? Well, there's many, just like any other indicator, many common ways that you can use these. And here are some of the more common ones, and where I think they're problematic, and then we'll look at a unique way to use them in the slingshot. So one common way is to buy at the bottom band and sell at the top band. So the problem with this approach is price can hug the upper or lower band for extended periods of time. And we'll look at this on some charts, but so that it's problematic, right? If we buy at the lower band and then there's a market sell-off, number one, we got inaccurate information, and number two, if we're in a bullish position at the lower 2 standard deviation band and the markets, continue to sell off, our losses will accelerate. So that's, for that reason, I don't like to use this approach. Another common approach is band contraction and expansion. And this is actually good information, but there's an inherent problem with it, because while it might be able to tell us with some degree of reliability if there's an impending big move in an asset, the problem is we don't necessarily know in which direction that move will occur. but it can give us good information. We'll look at that. But for that reason, I don't purely use band contraction and expansion. Another common approach is buy or sell at the middle band, right? So that's kind of like a mean reversion approach. If price is trading near the average, and you don't even need the standard deviation bands, right? You just need a simple or exponential moving average. Buy at the moving average, right? And that can work well in strong trending markets, but it fails in sideways ranging markets, or it fails at major reversals or turning points in markets. And for that reason, I don't like to use that approach. So what we're going to look at now is the slingshot. And this is a unique way to use the Bollinger Bands and analyze volatility, where we wait for the lower band to break. And I'll explain what that means, but basically price will hug the lower band and ultimately rebound to where the breach initially occurred. And this is the essence of the slingshot. And it's really formulated, designed around a contrarian approach to buying and selling. And you'll start to see the value in this, because this is really actually how markets operate, right? They don't operate in a fashion where you can buy at market tops with tremendous opportunity of a continued run up in the asset, right? That's typically where we tend to see corrections. Or we can buy, after a market sell-off. So this whole setup is designed with that contrarian approach in mind. And it occurs with astounding predictability. As I mentioned, the major market indices have returned to the initial volatility breakout with 100% accuracy, going all the way back to the dawn of the stock market. So if we look at the bear market of 2022, the flash crash of 2015, the flash crash of 2010, the major crash back in 2008 in the mortgage crisis, where markets lost over half their value in the second half of the year, on and on, right? 2000.com bubble, Corona crash, every black swan event, market correction, major crash, bear market, you name it. This is what this is built around. And so now we're going to get into the nitty gritty. We're going to get into the juicy details of how to identify these scenarios. So again, we're going back now to a daily chart of the S&P 500 index around the crash from back in early 2020. Now I've got the Bollinger Bands plotted on this chart. So notice that on the left edge of the chart, so back in February of this particular year, the bands were horizontal and close together, right? And markets were hitting new all-time highs. We have this uncertainty around a new virus that the economies, political structures, the whole global geopolitical macroeconomic event with huge uncertainty, and then that starts to catch up to the markets. They panic, and there's this market crash, right? So notice here what's happening. The S&Ps are, number one, they've rotated lower into the lower 2 standard deviation band. And then notice that the outer bands, so again, those are our 2 standard deviation bands, are beginning to diverge. So the upper band is pointing up, the lower band is pointing down. Simultaneously, price is trailing this lower band, and we get a market sell-off. Okay. Now, eventually, prices decrease enough to attract buyers. So even though, we haven't resolved anything at this point as it relates to the catalyst of this market crash, prices return right back up in a short period of time to the initial volatility breakout level. Okay, this is the slingshot. So I'm going to walk you through more examples and dig in a little deeper into the rules of this setup. It doesn't just apply to indices. Yeah, any asset, anything, any asset that you can create a price chart for can be applied. So here's one of Apple. This is just the daily chart of Apple from a previous year. All right, and notice that price of the shares of Apple were in a strong uptrend on the left half of your chart. All right, and eventually, right, there's probably some profit taking. I can't tell you the exact catalyst that caused the rotation lower, but we don't need to know that. What we need to know is that there's a volatility expansion and a slingshot setting up. Notice how price hits the lower band, And I mentioned that approach where a lot of traders will buy at a lower 2 standard deviation move. So they'll go long with the expectation price will reverse course and go back up. And in fact, in this particular situation, there was 2 very nice bullish candlestick patterns here at the lower band. Likely, there were quite a few retail traders out there that entered shares of Apple or structured a bullish position around Apple based on this. But as you can see, that's not what happened. Price actually trailed the lower band. So what was our clue? Well, number one, price reached the lower 2 standard deviation band. And while that occurred, there was a volatility expansion. So the upper 2 standard deviation band diverged, so it pointed up, and the lower 2 standard deviation diverged from the upper band and pointed down. So notice how the bands widen while, and this is the key, while the asset is trailing the lower 2 standard deviation band. All right. Eventually, shares of Apple came down into a support level, attracted buyers, and price of the asset goes right back up to the initial volatility expansion. And many of these actually will go beyond this initial level. This is often where I'll place my initial profit target level and maybe scale out of a position if the asset continues to appreciate. Here's an example on the NASDAQ ETF, NASDAQ 100 ETF, the Qs. All right, so once again, look on the left side of the chart. We have volatility contraction. We have relatively narrow horizontal bands. Price is just kind of oscillating between these bands until October 5th of 2018, right? Price comes down into the lower band, and simultaneously we get a volatility expansion. So the outer bands diverge and price trails the lower band. We get this major sell-off on the Qs down into the 143.50 level, which attracted buyers, right? So there was an opportunity to get in here as shares of the Qs reverse course and return right back up to the initial volatility expansion level, or the sell-off, where the sell-off initiated, right? Does it work on intraday timeframes? Yes, it does. So this is a chart of advanced micro devices on a 5-minute time frame. All right, and once again, notice that on the left section of the chart, we have relatively low volatility conditions. Shares of AMD are just basically oscillating between the upper and lower band. And this is where I mentioned that approach where some traders will buy or sell at the upper lower band. That would have worked okay for a few times, right? Until right here on the chart where we get a volatility expansion. So price hits the lower band, but instead of the bands remaining horizontal, we start to get volatility expansion. So we get a widening of the bands, and we got actually a couple periods of expansion here as price trailed the lower band in this sell-off on the 5-minute chart, but eventually came down into a support level, attracted buying interest, and drove the share price right back up to the initial volatility breakout level, right? So how do we identify the buy zone? Identifying where the sell-off is likely to ensue, right, is relatively easy. We're looking for a prior period of volatility contraction or relatively narrow outer Bollinger Bands. And then we're looking for price to come down and either touch or break the lower band. Meanwhile, and simultaneously, we want to look for volatility expansion where the outer bands begin to widen and the asset eventually sells off. Now the trick is to identify when the band is overextended and ready to snap back. Okay, so this is the slingshot. This is where we would be releasing the slingshot. The kinetic energy pushes the stone out and propels it forward, just like a trend in a market. And there's a number of ways to do this. You can use candlestick patterns. You can use support levels. You can use price action studies. You can use indicators. So there's a number of ways. Like one approach is you could wait for, and there was actually a mini slingshot here in this chart example. If you look on the very left where this slingshot initiated, we actually got a very quick slingshot. I call these mini slingshots, and often you'll see them occur within a large slingshot. We got a rebound back to the volatility expansion level, and then it and then it continued to rotate lower. And then we get the big slingshot. So we can wait for, a bullish candlestick back in the zone of the lower and middle band. A number of different ways to do this, but this is the trick, is to identify the buying opportunity. So what I've done is I've spent over a decade, because I used to do this manually, right? I used to just do this with some degree of guesswork, some intuition to determine these buying opportunities. And then I realized, I really need a more of an objective algorithm or formula to help me identify these. So I went to work, spent over a decade, thousands of hours trying to determine when momentum is shifting and a new trend is beginning. And it wasn't easy. It took a long time, a lot of testing. But I eventually got this formula dialed in, and I had to, number one, get it to work on all time frames, and then of course duplicate the success that I was seeing on the major indices, for instance, across other asset classes, other markets, and something that was adaptable, an algorithmic formula that can actually reliably predict market trends, but not just that, that can do so with advanced notice. I was so tired of all the indicators that give you lagging information, right? They're essentially, giving you a signal or some bit of information based on the past price of that asset. So they're not necessarily using implied volatility or forward-looking volatility. They're not using, data based on current and forecasted price direction. And so therefore you're stuck with basically relying on the indicator right then and there in the moment and hoping that it works out with really no degree of advanced warning. So my goal was to build in a method that can give us accurate buy and sell signals near the outer channels of the Bollinger Bands up to 3 candles in advance of the move. And I didn't build it specifically around the slingshot setup. It can be used without the Bollinger Bands. It can be used with other indicators for confirmation. It can be used as a standalone. That was my goal. But as I mentioned, I had already been successfully trading the slingshot setup. And I just wanted to get better. I want it to be easier without any guesswork or intuition. And I found that when I formulated the right combination of momentum studies, volatility studies, and price action, that this was actually possible. And I was actually able to build up this algorithm that can accurately identify buy and sell signals during major market turning points, right? And when we apply this on a daily time frame, it can tell us up to 3 days in advance what the anticipated move is. So if the algorithm anticipates markets are going to go up, it will tell us up to 3 days before that move potentially occurs, or vice versa, right? If there's a forecasted market downturn, it can tell us up to 3 days in advance exactly what price to enter if there's follow through on that forecasted trend direction, exactly how long this might occur, which I built in with a trailing stop algorithm that reads markets in real time, and I'll go into more details on that as well, and where to get out, right? And so this is what's been built into my trade trend indicator, and it includes a very complex algorithm, but it gives us very simple information, right? It tells us when to buy and sell up to 3 candles in advance. So I mentioned you can apply it to any time frame. So if you're trading off a 5-minute chart, you have up to 15 minutes of advance warning with an exact price entry level and of that forecasted move. So if the move doesn't occur, then there's no trade, right? And this is where I'm going to get into a little detail on order entry here momentarily. And this algorithm, number one, it reads markets in real time. So as it's running on your chart, it's analyzing all of these things. And if there's a triggered signal, or if you get into a trade, it gives us a trailing stop. So it's reading the market volatility, and it actually prints out a trailing stop level based on current markets and forecasts, not on lagging data. Okay. So when it's telling us this asset may reverse direction if I'm in a long trade, right? And it might rotate lower. If I'm in a short trade, in markets eventually, as they do, reverse direction, back to the upside, it's analyzing that without using lagging data. It's telling us in real time what that probability is currently and forecasted. So whether it's short term, long term, whether it's equities, ETFs, futures, Forex, whether it's a 1 minute chart, a 5 minute chart, an hourly chart, a daily chart. I love I'm a big options trader, so probably the bulk of my trading, I would say, is in options markets. I love using it for options. It helps with trade entry, trade management, all of these things. It doesn't repaint. So if you're familiar with indicators, that means that, and many of them do, that once it gives us a confirmation or a confirmed signal, it's set in stone. So there's no repainting. It doesn't go back with the benefit of hindsight and tell us, oh yeah. And that's often what you'll see with, unfortunately, with indicators out there. They'll repaint and you look at them with the benefit of hindsight and they look amazing, but then you go to use them in live markets and they don't work out the way that they did, that they looked in the past, right? We have built-in protection to avoid whipsaws. It helps us capture most of the trend before it reverses. It's designed to limit losses and let profits run. Yes, there are always going to be losses in trading and investing. There are no exceptions. There is no perfect strategy. There is no perfect indicator or tool. What there is, and what we actually should be looking for on our search for the Holy Grail, is positive expectancy. And what that means is that we need to it's a formula. You can actually Google it. You just Google trading expectancy formula. We need to have that formula work in a way that over the long run, if we execute the strategy correctly, it will produce a profit. It's kind of like a casino offering, gamblers table games and slot machines, right? They have a built-in edge that over time they know will make money. That's what we call positive expectancy. And to do that, we need to limit our losses and let successful trades run. And that's what the algorithm is designed to do. It can be used with any other indicator system for added confirmation, and it can help us trade without guesswork and more confidence. All right. So I mentioned that I would give you a little trick, and this is actually built into the trade trend algorithm to help eliminate a lot of our bad trades by simply not getting into them. And this is built into the formula or the algorithm in a way that it gives you an exact entry price after a buy or sell forecast. And for a long trade or a buy signal, that would be above current market price using what we call a buy stop order, or you could use a buy stop limit order. For a short trade, that would be a sell stop or a sell stop limit order, but below current market price, right? And if there's no follow through on the forecast or the prediction, then there's no trade. You simply do not get in. Most people tend to get in with limit orders or market orders, right? And that, I'm not saying there's anything wrong with that. It might be appropriate for the market condition or the strategy. But for a directional trade, I nearly always use a buy stop order for long trades and a sell stop for short trades for that very reason. And again, that's built into the indicators. So when it gives you a forecast, it also gives you a suggested entry price, right? Using a buy stop order for a long trade or a sell stop for a short trade. So I want to share some real money results that I've achieved using the slingshot and the trade trend indicator. I actually used it back in early 2020 during the COVID crash. And as I showed you on the S&P chart, that volatility expansion as the market sell-off, initiated back in late February of that year, I spotted that. I saw the volatility expansion. I thought, okay, here we go. Of course, I was aware of the advent of COVID and all of these uncertainties that come along with it. And I thought, okay, here we go. This is prime conditions for a market sell-off. There's still enough uncertainty that I was cautious. I reduced my market exposure, my number of positions, my position sizing, but I traded it on the way down, right? With relative small position sizing, as you can see, 1, 2, 3, 4 contracts. And at the end of the month, booked out over 13,300 in profits on the sell-off part of the slingshot, right? Which I also got a sell signal from Trade Trend on. And then March comes around, and trade trend prints out a buy signal near the bottom of the sell-off. I knew this was a perfect slingshot. I knew that I had the forecasted buy signal from trade trend. So I start to put on some more positions, still small position sizing, just 1, 2, 3 contracts. But I'm loading up more on the positions because I was confident of the rebound. Sure enough, end of March rolls around. I booked out over $27,000 in profits. In between the sell-off, which is again the beginning of the slingshot, and the rebound as the slingshot is released and markets return back up to the volatility expansion level, booked over $40,000 in profits just using the slingshot and the trade trend buy sell indicator. Now, that's an example of using it on the major indices around a major market crash. But as we looked at on some of the chart examples, we can use this on any market, any time frame. You can use it with any size account, and it gives us predictive buy and sell signals before the anticipated move. And it does so up to 3 candles in advance. So again, like on an hourly chart, you have up to 3 hours of advanced notice. You'll get a buy or a sell signal, a suggested entry price, and that could trigger within the hour. It could trigger 3 hours later. After 3 candlesticks, the signal is voided. If we haven't reached the entry price, it is not a confirmed signal or entry, right? And it's predicted or forecasted every market crash and rebound in the history of the market on the major indices with 100% accuracy. And that's just simply evidenced by the fact that we just recently hit new all-time highs on the major indices, on the S&Ps and the NASDAQ, right? So of course, even in the 2022 bear market, that slingshot has already played out and we've now exceeded it. But here's some past examples. This is flash crash of August 2015. Notice we have low volatility conditions. This is a daily chart of the S&P 500 index. We have outer Bollinger Bands, horizontal and relatively narrow, prices moving up and down between upper and lower bands. And then we get the volatility expansion. Notice the expansion where the outer 2 standard deviation bands diverge and price trails the lower band. We get a double bottom here. In October, we get a buy signal from trade trend. By the way, I didn't mention we got a sell signal from trade trend right there on August 19th before we even saw the significant rotation lower. We get the double bottom, we get a buy signal, markets return back up to the volatility breakout level. 2008 mortgage crisis, okay? What's happening? We're in low volatility conditions. Prices are just kind of trickling up. This is again a daily chart of the S&P. A sell signal from trade trend comes in here on May 21st, literally a couple days before the market crashed over in the second half of the year. And in this case, lost over half its value. Buy signal comes in late November before markets rebound. Here's the 2000.com bubble, sell signal from trade trend right there in September, October. And there's the slingshot, you can see it. And there's the sell-off. Buy signal comes in late September, early October, and we get the rebound. All right, so of course, any indicator, any system, any methodology, if you can stick with it long enough, is likely going to produce some winning trades. I hope it does. I hope it does, or you probably wouldn't be using it. But the problem is they don't keep you out of the market, right? When conditions are not favorable. They don't necessarily give you forecasts of up to 3 candles of advanced warning. And often we get stuck in bad trades, right? We're vulnerable to this market psychology where we're tempted to buy after markets are already making their uptrend, or vice versa, sell when they're crashing. And we end up giving a lot of our profits back on our losing trades. All right, and so that's what this strategy, the slingshot and the trade trend indicator are designed to help you navigate. Here's some more real world, real money examples. This is from my personal TD Ameritrade Thinkorswim account. Again, using the trade trend indicator. This is just the indicator by itself without the slingshot. And I also trade futures. So this is trading the futures markets, over $8,000 profit in a day, over $6,500 in a day. Over 6,000 a day, over 5,400 in a day. But what I want to point out here, because this isn't for purposes of boasting, it's to show you that if you look at my winning trades, they are, and you look at the P&L on those, because there are losing trades in here, right? I've got some trades that are down, but my winning trades are far outpacing these. This is the positive expectancy that we need to have in our trading to be successful and profitable in the long term. So they're always going to be losing trades. The indicator is designed to limit those, right, by reading markets in real time and detecting volatility expansions or trend reversals before we get trapped in them and they take off and we see our profits evaporate. Here again, just real not slingshot. Actually, no, this was a slingshot. So this was trade trend where I used the indicator, the buy and the sell signals around a slingshot setup. Did over $26,000 in one day with over 115,800 in open profit. So again, I'm backing up what I'm teaching you with real money results. I do this for myself. And as I mentioned, do not promise that anyone will mirror my results. I'm just showing you that what I've revealed, the strategy and the tools that I've demonstrated to you, I do use these myself. And these are real money results from those. So I want to help you have days like these, and I'm going to give you access to the exact indicator that I've used to achieve results like I've shared with you today. And I want to now invite you to join me to discover how I make consistent income in the markets day after day, week after week. And not just that, but it's partly the tools, right? You need to have the right tools, but then how do you do it, right? What is the process? What are the steps that I need to take to reach the level of success that I want to achieve? And so I don't just give our members at Altos the tools, I also give them the methodologies, the rationale, all of the things that you need to understand to get to that level, right? So all of my techniques, my indicators, I don't hold anything back. So I give you all the information that you need. And so I'm going to offer up to you now an entire year of the trade trend indicator, which again, you can use with stocks, ETFs, futures, Forex. You get exact entry and exit signals up to 3 candlesticks in advance of a forecasted move. So you have that buyer sell forecast before it actually plays out. And you get live interactive sessions with me as well. So every Tuesday at 7 Eastern, I host live sessions. You get to join those. We do record them if you're not able to attend, but you get to join those and ask me questions. I walk through other strategies. We had about an hour together today. And I will, Trav, I will answer the platforms for you here in a sec. And I taught you one of my strategies, but I have many, many more. So those are things we cover on our live sessions. You're also going to get access to those. You get members area access again for replays if you miss one. You get full support and coaching from me on these sessions. So I'm there personally. I'm there to answer questions and help you navigate markets and use the tools and strategies that we teach here at Altos. I also, if you're familiar with me or attend other educational events that I do a lot of education around option adjustments, and taking bad options trades and making adjustments to those. I teach a lot of that in my sessions as well, and how to do that around the trade trend indicator. I provide, what am I trading now? I even share some of my personal live trades with you in the session and what markets are working for me at the time. And I do all this to help you cut the learning curve, because in trading and investing, the learning curve is very steep. It took me well over a decade of trial and error, going through all these, ups and downs of this roller coaster of doing well, then doing poorly. And so our goal at Altos is to help smooth that out for you and cut the learning curve. So there is more in the package. I'll walk through everything that you get with this and then answer some questions for you. So you get 12 months of our indicator, trade trend, and you do get to select your platform, which I'll show you here just in a second. But you get an entire year. Normally we retail that for $1,499. You get our weekly live trade sessions, which retail for $550. You get personal coaching from me on those, which I charge at a minimum just for one student, $19.97, and you get all of that as part of the package. You get access to our invitation-only Facebook group of over 800 members who use trade trend and other strategies that we teach. You get our training on trade adjustments for options trading if you're an options trader, which is a course that we retail online for $900, and ultimately learn to trade whatever market you gravitate towards, whatever fits your personality, whatever time frame you like to trade, whether it's well, 1 minute, a 5 minute, an hour, a daily, whether it's equities, ETFs, Forex, futures, options. And then I'm going to throw in some additional training, which is our professional trading series online course. It's over 10 hours of online content that teaches our very best options, equities, currencies, strategies, which we value at $595. And then you get my latest ebook, How to Create Risk-Free Trades, which retails for $97. So the total value on this package for today's event is over $5,000. We're knocking 92% off, $397. You get all of it. You get all the bonuses. And to do so, all you have to do is go to altostrading.com/slingshot. We're limiting this to 25 seats for purposes of onboarding and providing good customer service. So we do limit this, which does not mean that you cannot still get these items, but you would need to get them at the retail price once the 25 seats are gone. So to get the 92% discount at only $397, altostrading.com/slingshot. No contracts, no commitments. You let us know if you want to continue on after your first year, and your grandfathered in if you do. So if you decide to continue after year one, which many of our members, of course, do, then you never pay the full retail price. It's always the 92% discount. Okay, so what platforms do we offer the indicator on? We offer it on TradingView, the online charting platform, Metastock, the downloadable charting platform, NinjaTrader, broker platform, Thinkorswim, which is now Schwab, right? Platform, and TradeStation. So when you join us at the altostrading.com/slingshot link and claim one of the 25 seats, you'll then be led to a selection page where you get to choose which platform you want the indicator on, whether that be a broker platform or an online charting platform. And again, you get both bonuses, our professional trading series online course and my latest ebook. And I've got a guarantee. So if you don't make at least your membership fee back in the first 90 days with us, I'm going to give you an entire extra year of Trade Trend on the house. Again, that's a $1,499 retail value if you subscribe to a year of our indicator. But I'll give you an extra year for free because I want to give you enough time to make this worth your while. And if you can't do that in the first 90 days, that's not a problem. A lot of us are very busy. Maybe we want to spend time practicing, which I definitely suggest you do before ever risking real money. Always learn and gain experience before diving in. So we don't want to dive in head first without that. So I realize that takes some time and effort, and I don't want to rush you there. So even if you don't trade for the first 90 days and you're just practicing, that means you didn't make your membership fee back. And that means you get an extra year on us. All right, so just let us know. All right, so I only have a couple minutes left, but I want to take any questions that come through. If I don't get to all of them, support@altostrading.com is our contact email, or you can give us a call, 800-895-9348. Once again, there's the link to claim one of the 25 seats at the 92% discount. Here's everything you get. And I will go ahead and take any questions if you guys have those and want to put those in the chat box. All right. Dave, are you going to show setup for Bollinger Bands on Thinkorswim? Yeah, so I do those on, they're a little bit time consuming, Dave. So I do those on our weekly live sessions. We do get into the live broker platforms and charting platforms and do those on our live sessions. But yeah, those are the parameters: 20 period mean and 2 standard deviation for the outer bands setting. Let's see. Okay, yeah, platforms. So platforms, again, you get an option of TradeStation, Thinkorswim, NinjaTrader, Metastock, or TradingView. Okay, so you get to choose whatever platform you'd like. Actually, I don't have a Ninja account. MKXY asked that. I don't have a Ninja account, so I do not use it on NinjaTrader, but we do offer it there. But it will look similar to what I showed you. The charts I was showing you on our session were TradingView. It'll look similar on Ninja across all platforms. The symbology might be slightly different, but you get the advanced buy or sell notification or arrow on the chart, and then if there's a triggered, and it gives you the exact entry price, right? And then if there's a triggered signal, if the asset actually reaches that price and we're in an active signal, it will print the trailing stop levels for you as well. Yeah, can you use it on more than one platform? Yeah, we can work with you on that. Once you join, and we're in the process of setting your membership up, let us know. And again, here's our, let me go give you our contact info again. Here's our contact info. Let us know, and we can work with you on additional platforms on that as well. All right, well, looks like I'm out of time. I want to thank all of you for joining today. I hope you got a lot out of it. Welcome to all of you who are joining the membership package. I'm looking forward to working with you. We'll get you set up today. You'll have the indicator. You can start using it, and we'll get you set up with all the bonuses and training as well. So once again, thank you very much. Thanks to David, and look forward to seeing you all soon.